Welcome to everyone. If this is your first encounter with Idox, then let me give you a little bit of background to the company. And then during the presentation, we'll describe our business strategy, the way forward for the company, and why we feel there's a tremendous amount of value yet to be realized in the business. So Idox is a leading supplier of specialist information management software solutions. What does that mean? Well, for us, it means that we're experts in providing software that supports professional standards, deals with a lot of software that deals with a lot of issues in relation to compliance, legislative management, and so on across the public sector and regulated industries. We work with over 90% of UK local authorities, many of whom are customers for several of our products. The business was founded back in 2000, and we have today over 8,000 customers and over 600 employees with offices in the UK, USA, Europe, and India. And today, our revenues are around 68 million. So what is our strategy? Rob and I have been with the business for a relatively short period of time. I joined the business back in June of 2018, and Rob came on board about 6 months later. When we found the business, it needed quite a lot of work to bring it back into good order. But over the past 2.5 years, we've made tremendous progress in re-establishing Idox as a great business with some great software products and market positions. And as we look forward now, it would be great just to spend a little bit of time to tell you what we've actually done during that period of time, how that's translated itself into results for us, and how that's created a really strong position for us to move forward from. So our focus during the last 2 years has been on one Idox, to bring together our software business under something we've called our 4 pillars framework. The 4 pillars are a focus on revenue. We only serve revenue that is delivered through our own IP. We focus on margins, ensuring that each piece of business we write is at strong margins, and that we don't leak margin within the business once we've captured contracts. We focus on simplification, making sure that our business works with as much simplicity as we possibly can have. And then finally, making sure that we communicate that well right across the business, but ensuring that our stakeholders, our shareholders, and our staff have the same message, just one simple narrative to understand the company. As we pointed out, we have a tremendous number of customers across the public sector, across engineering, and in the compliance sector. And as part of that, we have a very strong account management model and great relationships with customers over a long period of time. So attrition in our business is relatively low. We have contracts with clients that are typically 3 to 5 years for our software products. And our engagements with customers usually last 3 or 4 iterations of those contracts. So it isn't unusual here at Idox for us to have a relationship with a client for 10 or 15 years. And that provides us with a great basis on which to engage with them over an extended period of time, and to ensure we have the opportunity to supply them with more services that help them with their business problems. I mentioned gross margin improvement, and when Rob and I joined the business, our margins in the business were below 17%, and we set ourselves a short-term goal of having margins of around 30. I'm pleased to say that we've got there a little bit ahead of time, but those gross margins and improving our gross margin has been a significant factor in our improvements as a business, has also driven our improvements in cash and our reductions in debt. And both of those things are giving us the opportunity to reinstate dividend during the course of this year, and as importantly, giving us greater flexibility as we think about investing in our business, both organically by developing more software, but also inorganically by looking at bolt-on acquisitions that will be additive and accretive to the company. We have a clear focus on client development. When I first arrived in the business, it was clear to me that a cloud-first strategy was imperative for the company, and we needed to do more to present a cloud-first strategy to our customers. We've done that during the course of the last financial year, back in August of 19. We bought a business called Tascomi. That has provided a clear cloud-first direction for our main markets, but also provided us with the technology platform from which we can move forward and deliver more of our solutions in future. So cloud first and a digital strategy is absolutely imperative to our future here at Idox. I mentioned our staff before, and we generated a strong values-based culture in the business. When we first arrived, I think it was pretty clear that staff were not as well connected to the business as should have been the case. And it's obviously hugely important for us as a business that we have staff that not only come to do great work here at Idox, but feel connected with the business, feel that this is their passion, and feel that they can deliver real value to customers and in turn to shareholders. And we've put a lot of effort into our communication and our engagement with people during the course of the last 2 years, and that's reaping real benefits for us now. And as I mentioned earlier, our cash position or our debt position has improved tremendously. Today we're sort of 68 million revenue, 20 million EBITDA, producing 11 million of free cash. And that production of cash has allowed us to pay down debt. Rob will cover a little bit of that later. And importantly, given us the ability from our own resources to be able to do complementary and selective acquisitions that underpin our future strategy as we go forward. So as I say, back in FY18, we had a market cap of around 130 million, revenues at 65, EBIT at 14, and a net debt position which had come down from 35, but at the end of that year at about 26 million. Today we're around a market cap of 220, with net debt down again by a further 10 million to 16 million. And if we do nothing else but fulfill our objectives during FY21, then our debt position would be down to around 6.5 million. And in fact, we would be at that stage cash positive with the banks. We have about 11 million of our debt, which is in a bond in Malta for about 11 million pounds. So at that stage, we have a lot of flexibility to move forward. But the exciting part of the story, I think, here at Idox is that having established these firm foundations through the 4 pillars that I talked to, we now have the opportunity to continue our journey on operational excellence and building up the business to improve margins, to improve our organic revenue growth, add some selective acquisitions through inorganically, and to build on the cloud journey that we've begun. And all of those things we think leads to better margins in cash and a cycle of being able to reuse that cash to the betterance of shareholder value as we go forward. So we talk internally about the walk, run, fly stages. Rob's going to cover a little bit of that, I think, later. And we'll talk to you about this sort of next phase of our journey, which is definitely going from run to fly. So quick summary of the business. Today, Idox is primarily focused on software. It's primarily focused on the UK public sector. And as I mentioned earlier, we provide software for legislative compliance and document management software in a variety of applications within local government and the NHS. If you've ever applied for planning permission, voted in an election, or had information provided to you around transport networks on when the next bus may be available, chances are that you'll have encountered some form of Idox's software. We tend to have very strong market positions in niche areas, which are fairly defensible and have higher barriers to entry. And those things produce a good cash flow for us to be, as I said earlier, to be able to reinvest in the business. We also provide software for engineering information management that delivers document collaboration software for international infrastructure and asset constructors and operators. It's in terms of the shape of our business, about 2/3 of our business is in the Idox software business. That's in our public sector operations, and then the remaining third is split between the engineering information management side and the next part you can see there, which is Idox content. That deals with 2 elements. It deals with compliance software for e-learning and employee compliance training platforms, That's based in Germany and covers Germany and Belgium. And we have a grants consulting business, which provides expertise in grant funding applications for Dutch commercial companies. So maybe at this point, I could hand over to Rob, and Rob can take us through our FY20 trading update.
Yeah, sure. Thanks, Dave. Good afternoon, everybody. So Rob, CFO, has been with the business for a little over 2 years now, actually. So I thought I'd start by just taking the group through our trading update that we released to the markets maybe 2 or 3 weeks ago. I suspect most people have sort of seen the headlines, but in summary, confirmation that we're in line both with the market, but more importantly, where we said we were going to be. Earlier on in this journey, we had very clear views under the 4 pillars framework that Dave has explained. Around how we were going to improve both revenue and recurring revenue, but also more importantly, profitability, i.e. adjusted EBITDA, and converting that to cash flow to bring down our net debt. I'm very pleased to say that we've hit all of those objectives in quite a strong way. As you can see from the numbers, adjusted EBITDA are up strongly year on year. As Dave mentioned earlier on, we are pretty much at the 30% EBITDA margin level that we had strived for. Notwithstanding that, though, still looking to continue with marginal gains across the business. We'll take the group through shortly some of our thoughts around some of the opportunity that exists both in the existing business, but also some interesting scaling opportunities with some carefully selected bolt-on acquisitions. But we do think there's more opportunity in the Idox software platform. And as Dave again mentioned, I think Dave, you've probably stolen most of my lines. Our net debt's coming down very strongly. So in fact, it's halved from the time that both Dave and I started. I think he mentioned it was around just over 30 million, about 32 million. So in 24 months, that's halved down to 16.1 now. Actually, when you exclude the Maltese bond we have, which is long-term financing, means we're actually around about 5 million in the red to the banks versus our facilities, which are 35 million RCF plus another 10 million on accordion. So quite a bit of financial headroom and firepower in our facilities. And when you combine those two, the all important leverage, again, when Dave and I started, that was hovering around 3. I'm very happy to say that it's now very comfortably below 1 and heading towards a net cash position because of the improved trading performance. We wanted to set out a bit more detail, a bit more tangible detail behind the 4 pillars framework that we described, and it really is more than just sort of warm corporate speak. It is very much inherent in everything we do. Every sort of initiative that happens across the business falls into one of these buckets, and it's truly part of the Idox DNA to keep improving across all these various headings. I won't read out every one because I'm sure the group can do that. And I did want to just run through the revenue expansion one in particular, though, because I think that one in particular is quite illustrative of the big gains that we've made just in this financial year and continue to make. So as we noted on the first bullet point, and again, this was a highlight in our trading update from a couple of weeks ago, we're very proud of the fact that we have put in Idox's first group-wide CRM right across the group. So previously there was a collection of individual instances and Excel being used relatively creatively, which I guess is a fairly common occurrence, particularly in a business that's growing by acquisition. So back in April, we took the decision to invest in Salesforce and rolled that out across the business, initially to track pipeline management in the way that Salesforce is famous for, but more recently we've expanded the use throughout a lot of our sort of sales execution process. So we now use that to not only manage the pipeline, but we use that to manage our marketing campaigns to really see where we're hitting home with our collective efforts on marketing. We're also using that to help manage our sales governance process. And one of the big changes that we made when we started this journey back in late 2018 was to really focus on the sales governance aspect of the business to make sure that not only were our customers getting the right solutions for us, but that we were getting the right value across the various bits that we did for them. And we've industrialized that much more with Salesforce now, with price books, price books that are based on cost plus margin being baked into the Salesforce process that help us with turning opportunities into orders and ultimately into invoices. We've also, on the basis of the new platform that Salesforce has given us, created an inside sales team and really look to help our sales teams out by moving more of the routine order taking type activities to a dedicated inside sales team, and they really help drive the efficiency with those, but also help ensure that there's a proper touch point with the customer when it comes up to whether it's renewal, whether it's a marketing campaign. They do have somebody on the end of the phone at Idox that can talk very credibly about not only the solutions that Idox have, but the way that they're deployed into the customer's environment. And doing that's allowed us to really free up our broader sales teams to increase their engagement with both existing customers, but also other customers in the market to really help drive our presence generally in the markets that we serve. And then finally, just to mention to the marketing team. So again, as with a few things at Idox, there were various marketing efforts going on across the group. So around this time last year, actually, it was about 12 months ago, we appointed a new marketing director who really consolidated all of our marketing efforts and crucially our resources to a single centralized marketing team, and that team now is directly aligned to the sales team. It's directly aligned to where we as a management team see the most opportunity in the business, in the product portfolio, in the existing markets that we serve. And so all of our sales campaigns are now directly aligned to where we put the wood behind the arrow in terms of our sales engagement, where we see the most market opportunity in our existing customer base. And Dave mentioned the terminology that we've used for the phases and the progression of the business over the last 24 months and going forward for FY21 and beyond. A lot of activity in FY19 in particular as the new team got to grips with the broad Idox business, and a lot of focus, as I mentioned earlier, on sales governance in particular, but also really getting underneath the MI that was in the business and really understanding the assets that we had in the business and the customer relationships to really understand what the opportunity was for the business. And then coming into FY20 off the back of establishing that baseline, a lot of activity to really understand how we can do more to service our customers. Idox has some fantastic IP in its portfolio. As Dave says, we have some not only market-leading products, but also some very long-established and respected market positions with our customer base. So it's doing more with the IP that we've got, both in our existing customer base, but again, in the markets more generally that we serve. And then coming on to the fly phase, we are thinking hard about having created the stable platform, having got the business firing on all cylinders and certainly pointing in the same direction. We have thought quite hard about how we move the business forward to really increase the pace in the business and see that coming through in terms of increased scale and financial results. So we basically identified sort of two groups of activity. The one on the right hand side, buy and build, probably doesn't need too much explanation, but in summary, having now consolidated a lot of separate businesses in Idox into a single software consolidated platform, we think we're very well placed to pick up sort of bolt-on level acquisitions, primarily product-led businesses that we can support to grow faster than they could have done independently, and particularly with our account management and sales network. We do have relationships with the majority of the local authorities in the UK and a big chunk of the NHS trusts. We think we are in a very strong position to take those businesses and help them scale in a very high margin way, because for us to take those products to market, we can do that at very little incremental cost. On the organic growth, it's very high sort of beat rate of activity across the piece, to be honest, but there are a few common themes that are coming out. The sales team stratification I just talked around, how we want to move more of the let's say routine customer engagements to a dedicated sales desk and look to capitalize with the remaining sales team on some of the market opportunities. We're looking at the products that we've got and looking for similar deployment opportunities in the local authority area. We're looking at our existing revenues and making sure that, again, there's a touch point with the customer, that when they renew, there's an engagement to understand what their needs are and what product we have to help them fulfill the needs. Continued tighter operational integration. I mean, we have made significant progress on this over the last 24 months. The latest unit to be fully integrated is EAM. We're most of the way through that journey now as we complete that. But as an example of some of the things that we've been doing, we started FY20 with 5 UK statutory companies and ended FY20 with just the one. So not only were we integrating things into a single software platform, but at the same time simplifying the group's corporate structure.
So as you can see, it's been a busy time here at Idox. When we list out the things that we've done, you do sometimes think, where's the time gone? But then it's there in black and white in front of you. Look, I think we've enjoyed the journey. I think we've put the group back into very, very good standing. I think we're a well-run business with a great management team, and we feel we've got a lot of the credentials there to be able to drive our success forward, as Rob's pointed out, through this next fly phase, as we've described it. I think it's worth saying that in all of our markets, in some shape or form, have been affected by COVID. But during that whole process, we haven't had to use any of the government schemes. We haven't tapped into any of those things. We've always felt that we are a strong business that will be able to manage well through that process. Our EIM business was a little bit more affected early on by COVID, as was indeed our compliance business in Germany. But all the businesses have been very resilient. All have shown strong order book growth in year, and the operational improvements that we've put into the business have allowed us to direct ourselves through this quite challenging time in extremely good order. And I think our public sector customers, the longevity of those contracts and engagements, and our ability to support them during what's been a very testing time for public service delivery, I think has been appreciated by our clients, and if anything has given us a greater connection with them, empathy with the things that they do, and an ability to understand how we can help them going forward. We continue to think about the demand trends that are coming from our clients. We've spoken about cloud. Again, if anything, COVID has, I think, brought home to our customers that being able to consume IT services and not have to worry about the delivery of IT services is a great thing. So we see that being a big factor as we move forward. We at Idox talk actively about digital transformation, but in the specific lanes and niches in which we work. As I said earlier, we're providing software that supports professionals to do their job and also to be legislatively compliant in doing those jobs. But that is quite clear to us there are massive opportunities for us to improve through digital means the way that they transact with the public, and the way that documents and information in particular automates a number of the processes that they have to deal with on a day-to-day basis. In most of our public sector markets that we address, for instance, one good example would be in planning. Local authority employment in that area has come down by a third over the last 10 years, and yet the number of applications that are dealt with have increased during that time by about the same number, by about a third. So I think it's an indication that our markets have depended on IT and great software provisioning to help them be more efficient and effective during that period. And we see that increasing as we go forward. The ability to continue to improve software through the dreaded words of AI or machine learning are definitely there, and we can see a number of technology enhancements that we're able to provide to our customers, which will make their interactions with the public and the responsiveness that they have to delivering public services to increase significantly over the next 5-year period. So what we always guide holders of our stock to in this area is that in our core PSS market, we expect them to be sort of mid-single digit growth. That's our experience. That's what we can see as we go forward. And the things that Rob's described in our ability to execute with the client in a better way, in a more efficient way, plus the more things that we can take to clients, I think will help us sustain single mid-digit growth as we go forward over the next few years. In EIM, we're definitely seeing this move to cloud to align with project-based buying. We have successfully moved our product set in that area into the cloud. In our EIM area, about 80% of our revenues are recurring, so we can have a lot of confidence in our ability to grow that business as we go forward. And that digitization agenda that I mentioned earlier, particularly with documents and assets, their identification, tracking and management, is very high on the agenda for people in that area who are looking at things like the digital twin, that digital representation of their business, to be able to do what-if analysis and think about the supply chains and the way that they deliver to their end customers is very significant, and we've already responded to that. And in our content business, we can see the increasing consolidation of providers in a growing market. We're expecting a recovery in that sector as we come out of 2020 and into 2021. Again, we can see the market expanding to mid to high single digits in that area. So for us, we feel we're well placed to meet the demand trends that we can see, and we think we have the ability to continue to improve the existing IP set in line with those demands and requirements. So just to summarize, we appreciate your time, and we're very grateful for you to give us some of your time. We never take that for granted. But I think the main things that I'd like to pick out are listed here. We've spent a huge amount of time in the business making sure that we're fit for purpose, well governed, well managed, transparent in our dealings with our staff, with our shareholders and our other stakeholders, and authentic in the way that we work within our business, work with customers and represent ourselves accordingly. We've put a tremendous amount of effort into making sure that Idox is a well-managed business, and I think we've done a very good job with that, and that's quite apparent in the results that we've been able to put out for FY20. It's been great to see the fulfillment of the work that we've done now being reflected both in our results and in our cash performance. As we go forward, we want to consolidate more activity around our public sector software and to continue to improve our margins and our cash production. In the product management area, absolutely clear focus on digitization and the path to the cloud. That for us is a journey, as it is for our clients, but we see it improving in pace as we go forward. And again, we're well placed to take advantage of that trend as we go into the next couple of years. And it would be remiss of me to not mention the fact that we are seeking to introduce a final dividend in respect to FY20. I think that would be a welcome return for Idox to paying a dividend. We as a management group and as an executive team and board see it as a good discipline in the business. We feel that shareholders should receive dividends and would trust us to do that. So we're very pleased that that will continue to be our focus moving forwards, alongside our investments in bolt-on acquisitions to improve overall shareholder gains. So as it says, we're ambitious for the future. We think we're well placed to take advantage of the opportunities that are there, and we've given ourselves a really strong platform to move forward from.
Please can you comment on the competitive landscape, particularly in the public sector? Who do you compete against, and why do you win?
Look, it's a great question. It just happens to be quite a broad question for us. So I think the point to make is that the public sector markets are inevitably comprised of a series of niche sectors. And we at Idox have concentrated on trying to achieve very strong market shares in some of those niche areas, because we feel that improved margin comes through scale. So when we talk about competition, it is never the same competitors that operate in those niches. without a desire to take on 30 minutes in answering the question about who our competition is, I think in general terms, I can point you to people like Civica and Capita, who have an extensive software business in the public sector arena. But then there are always a series of smaller niche competitors that we come across. The point I would make is that in all of our planning in those sectors, we've concentrated on a couple of things. One is understanding our unique value. You always win in public sector markets where you can show the creation of great value for the client at a price point that is superior for that value. So we're always thinking about how we add extra value to our public sector customers or create best value, and that can be by being better, quicker, faster, more efficient, more effective, and making them more effective in what they do. If you go to my earlier example of saying where employment in certain niches has reduced so significantly, all of our customers need their software applications to do more. It has to do more. It has to be more than an administrative function or something that just is a storage system for them. It has to deliver real value in the quality of the engagement that they have day in, day out, and supporting that expert in being more productive themselves. So we're always looking at how we can improve those things, both through simplification and the application of more technology. And over my two and a bit year journey with Idox, our narrative in the business has changed quite dramatically from being governance and control and re-establishing how we work into how are we adding more value for customers. That's the main driver of everyone in our business right now, is how do we improve outcomes for clients, because we genuinely believe that that will keep us ahead of our competition, whether it's large competitors or small niche players who are very effective in the way that they work. So I hope there's a bit of rhetoric in that, and I'm sorry for it, but as you can tell, it's you'll have pinched one of my buttons there. So hopefully it gives some insight to the type of competition we have. But as I say, what in the areas in which we operate, our absolute goal and aim is to be market leaders. And as I always say internally, leaders shape the future. We don't sit with what's there currently. We have to shape the future in order to retain that leadership position. So that's where our effort is going. If I take our planning and building control area, we probably have about a 60% market share of that sector. In licensing, environmental health, other adjoining areas to that, it's about 30-35%. So there's room for us to continue to grow our market shares in the relevant areas that we work, by showing our customers that we can improve value by taking more of the innovations and software products that Idox produces.
Do your customers still have any reservations about cloud delivery of software platforms?
There is always inertia. I think if you look at a number of, and it's not just across the public sector, by the way, I think there's always a slight fear of the unknown. All I would say is that I know this is probably corny by now. Everyone will have heard it several times, but if there's one thing that the pandemic's shown us, is that we're all capable of innovating, reacting, working from home, and collaborating in ways that we hadn't envisaged some time ago. So I think technology is, the sort of software that we produce is absolutely seen as enabling that activity now, and consuming it as a service when we're not present in the same locations is absolutely, I think it is clear now that glass ceiling's been broken. The question will come, I think, in terms of its adoption, just really about how people see through their existing investment cycles. In the public sector, they take their job of being guardians of public finances very seriously. I think people don't often remember that, but they do take on board spending public money very seriously. And if you spent cash 3 years ago, 2 years ago, and you're 2 years into your investment cycle that you'd imagine to be 5 years, there will be a lag as people take maximum value out of that before they do deploy cloud-based solutions. It's not change for change's sake, it's change for dramatic efficiency improvement. So, that's the journey that we'll go through. But I think in terms of the cloud itself and delivery through SaaS, I think that ceiling has absolutely been broken now.
Is there any opportunity before 2025 to repay the 5.1% bond early and refinance this on lower interest costs? Is there a tipping point where interest saved offsets costs of early redemption?
Yes, it is. It is something we look at, and there is absolutely a sort of a financial arbitrage calculation to do. And at a very simplistic level, the coupon on the bond I think you mentioned was 5.1%. We're paying around sort of 3 to 3.5% on our bank facilities. So there is an argument that we could reduce that difference between the two. It's a relatively slim difference, I would say. I mean, there isn't a significant difference in interest rate that we would need to equalise. Our view currently is that the cash that we could spend to settle the bond is better off being put to work in the business. So whilst we have reduced net debt down considerably over the last 24 months, we are comfortable still running with a certain level of leverage, and therefore we'd much rather use the cash to back ourselves, both in terms of our own investments for the business as it exists today, but also some of these bolt-on acquisitions that we were referring to. And so consuming our existing bank facilities by repaying the bond would limit us in that respect. But it is something that we do continue to consider. The actual mechanics of it is we would have to make an open offer for the bond in its entirety. So there's no way we'd be able to partially redeem it. It's all or nothing. So yeah, in summary, we think we've got better uses for the cash right now, but it is something we continue to consider.
First off, to David. Hi, David. How much technical debt is still in the business, i.e., how much of revenue is non-cloud? And then briefly over to Rob. Since your arrival, what's gone on with DSOs? And is that the way to model out how working capital has improved? And is there a general sort of target cash conversion rate? Thanks very much.
Thanks, George. Appreciate the question. So firstly, just a bit of definition, really. In terms of numbers and cloud, I'll answer the question because it's always best to answer the question and then give you caveats rather than the other way around, maybe. We have about 10 to 11 million of our revenues today, which are cloud, i.e. completely SaaS and delivered that way. So the majority of our revenues come from other software products that are classic enterprise solutions. Now, they may be delivered in a hosted way via ourselves or through third parties, or they may be on-premise solutions where the client continues to have a traditional licensing and maintenance model. But I don't necessarily see that as technical debt. I think the key thing for us is that you have the best professional applications in the areas that you're addressing. And right now, there are lots of reasons still that some clients would want to have, as I say, hosted solutions, managed service style solutions, or on-premise software, particularly where that expert software is heavy at the client end and requires and demands some of that support, those expert activities. So I think the way that we think about technical debt is to think about, are we in competitive deficit? And are there things that we need to put into our software development plans to reduce that or increase our competitive advantage? That was one of the big thoughts behind the purchase of Tascomi back in August of last year. That has absolutely been a help for us in making sure that we were leaders in that area and that we'd have a great platform to move forward from. I do mention this in our annual report, which no one's seen yet, but so bit of an early release here, bit of a spoiler alert. But we actually have moved during the course of this year our social care clients onto the Tascomi, now rebranded as Idox cloud platform. We felt that was when we bought that business, we felt we were buying a great technical environment in which to be able to do that kind of migration, and so it's proven. So we released some new software in that regard last year during the fourth quarter to a specific group of customers, and that will go into general release in February, and our clients will come on board then. So hopefully that gives you some sort of indication about how we think about software. We look very hard at our deployment of capital in all those areas, but having that cloud environment and that technical framework for us to move to the cloud has just been a really important part of our future migrations and growth there. And maybe Rob, if I hand over to you, you can talk about DSOs, because
yeah, absolutely. It's quite nice to have a few minutes to think about my answer, actually. So George, yeah, thanks for the question. I mean, in DSOs specifically, I mean, Idox continues to have very good credit control and a very good sort of debtor recovery, which by the way is exactly what you'd expect from a public sector organisation. You know, we put quite a bit of effort in via our sort of revenue assurance team to make sure that the purchase order process customer side is very well understood and managed, and certainly for our software revenues, which are largely in advance, and for customers that have been in situ for many years, that's a pretty well-oiled machine, to be honest. The bigger question around, I guess, cash conversion, that there has been a very significant shift in the last couple of years, which is really sort of seeded in the accounting policy reset that happened towards the start of FY19, or the walk phase, as we like to call it. So previously, you know, I don't think it was any secret that Idox was pretty aggressive in terms of the revenue recognition policies that it had, and when you look to the cash conversion sort of pre the new management team, I mean, there just was no cash coming out of the business despite relatively high levels of EBITDA being reported. So flash through to today, and as Dave sort of mentioned earlier on, you know, very broadly, we're generating about 20 million of EBITDA today, and that's converting to about 10-11 million of free cash flow. So 20 million of EBITDA less about 4.5 of capitalised R&D, about another million of other capex, you know, a bit of tax, bit of interest, bit of RFS 16 in terms of the leases, gets you down towards that 10-11 million. And you know, that's a pretty sound relationship that we see. You know, as our EBITDA figure increases, we'll look to slightly increase the free cash flow. You know, we absolutely want to keep a rein on capex as the business scales generally, which should inch up our sort of free cash flow conversion generally. But yeah, we see that as a pretty healthy conversion that we're pretty pleased with, actually.
What have you learned in some of the less successful acquisitions made in the past before your arrival, ! Which you can apply to make sure that future acquisitions are more effective?
You know, ultimately, I think the businesses that were bought had strong IP. You know, a number of them had strong IP. I think there are two things. One is because I want to give you a guidance to how M&A might look as we go forward in the business. M&A has to be, for me, connected to the things that we do incredibly well. I think in the past, the previous management group probably came under pressure to think about growth and think about moving into new areas and being able to explore new areas and see how they could get into growth. I'm absolutely comfortable with us growing this business by being unique and by being market leaders in the things that we do. I think there's plenty of room for this business to grow in those areas. So being able to closely integrate acquisitions that you make, I think produces two things. I mean, firstly, a coherent business, and a coherent business for your customers that makes sense. And secondly, an ability to really leverage the scale of the group in terms of improved operational performance for shareholders and for clients. So that's the thing for me. A clear and narrow focus in the areas that we buy into, I think is critical for the ongoing success of this business, and we're going to ensure that we're disciplined in doing that. You know, Rob and I have set our own views out that I think at the current time we could make accretive acquisitions, and I think we feel strongly that we can improve both the top line and the bottom line performance of those businesses, you know, quite significantly by being part of the Idox group. So I think, you know, just quickly, I think, you know, that in terms of the lessons, it's all about focus. It's all about creating better market leading positions in the things that you want to be famous for. And I think here at Idox, we're clear about what that means for us going forward.
So David has asked, I noticed that you've included an ESG slide in the appendix to the slide deck handout. Could you talk a bit more about those and what you see as the most important ESG aspects of the business?
It is interesting. So ESG has absolutely been moving up the agenda, both in terms of what our employees are telling us, but also, you know, what we're hearing back from the industry generally. You know, there's quite a bit of a groundswell movement, as I think everybody's aware. In terms of what we do specifically today for ESG, I think phase one, which is really where we are today, to be frank, was really understanding where we do, particularly on the climate side, where we do impact you know, the communities around us, but also actually equally understanding a lot of the really good work that happens across the business and making sure that that's given proper airtime in terms of how we communicate what we do. And it's one of those things, you know, we've actually been doing a lot of really good stuff over the last 24 months. It's just some of it hasn't specifically had the label of ESG. So, you know, given that we are sort of at the start of this journey, we will be talking more about this, by the way, in our sort of future presentations. It's really understanding what we do today as a group. And it, you know, as per the slide that we included in the pack, in summary, from a climate impact point of view, you know, as a software business that largely works from home, I think the reality is we don't have a significant impact, but where we do, we want to make sure that we're controlling that. So that the obvious one is office footprints, and also, you know, policies around travel, both of which are very tightly controlled. In terms of the social aspect, we put a lot of effort into developing our own staff, making sure that we have a very strong culture throughout our organisation, but also, you know, really trying to promote equal opportunities throughout our organisation. We've also been talking a lot about the impact that we can have on our communities. So we do have various initiatives throughout the group, mostly staff-led today. But Idox does match fundraise, for instance, for all those initiatives across the group, and we're about to embark on a staff volunteering program over the coming weeks and months. And then finally, from a governance point of view, you know, very aware of the need for strong governance, not least because of, you know, where Idox has come from over the last sort of 24, 36 months, and very keen to not only do but be seen to be doing the very best that we can, both in terms of sort of PLC governance, but also governance throughout the organisation at a fairly detailed individual process level. You know, we talked all about sales governance, for instance, as one example of that. But you know, we're very proud holders of various quality assurance stickers that we've worked very hard on over the last 2 or 3 months in particular, which again you'll see more coming through on the annual reports, which I should have said on my slide, by the way. We're planning to release our FY20 annual report in early February 21.
Sorry, just to add to that, and very quickly on it, for us as a leadership group, the most important thing about the ESG stuff for us is that it's authentic and it's reflective of the business. And I think Rob's articulated well that we've got so many initiatives that have come up through our staff. I mean, these things do matter. They matter to them, and you know, as a result of that, we make sure they matter to us as a business. So, you know, we do a tremendous amount to try and reduce the amount of waste that we have in the business, and we think that's both valuable for shareholders and also for our ESG agenda. You know, we're always thinking about marginal gains, simplification, and the impact that it has on our communities that we interact with, and our clients in particular, is absolutely at the top of the list when we're considering how we tackle some of those issues. So, you know, I mean, for me, I don't know if any of our staff who are holders will tune into this, but you know, for them, you know, we're really grateful for their efforts in helping us forge new ways of thinking about how we solve problems in the business. It's been really impactful.
Great presentation, guys. Thank you very much for the openness and the clarity. Life is full of surprises, we found out in 2020. What are the 2 potentially big threats to your ambitions that you're keeping a strong eye on?
Only 2.
We're shorted.
Yeah, no, that's fine. I do have a tendency, as Rob knows, to be flippant at the most inopportune moments. But look, really appreciate your question. Look, I genuinely think that many of the issues that we're facing Idox when Rob and I first arrived in the business was self-inflicted wounds, and having put all the hard work into recovering from those, we're just really conscious that we remain very focused on the things that we do brilliantly well and execute well. So the first thing that we're alert to is not tripping ourselves up. It's very easy to say that in a business you remain focused on doing the things that you do. I guess you'd expect any CEO to say that, but to do that requires an absolute cast iron will, and it requires all of the group to be self-governing in ensuring that we're doing the right things in the right way. I think the second thing that opens up a real opportunity and a threat at the same time is of course, is the digital agenda. Now, I think we described earlier that journey for Idox it's not a 3, 6, or 12-month journey. From many of our customers, that's a 3 and 5 year journey. So it does represent both a great opportunity for us to drive forward with them and provide them with great solutions in those areas. And I think inevitably, because of the impact of digital and cloud delivery on operations, just does present a brilliant opportunity for us to continue to expand and grow. But at the same time, we absolutely can't be complacent with it, and it would present a threat if we don't lead the way on that. So I think that for me is a critical part of what we're doing.
Given your big exposure to the UK public sector, what proportion of revenues is generated by your 14 offices worldwide? It seems a rather big international footprint for what is basically a UK-orientated company.
Yeah, it's good question. I mean, of the 14, I should say, we have 2 main offices in the UK. I mean, obviously, all of our offices are largely empty now, clearly. But in the UK, we have 2 main offices: one Glasgow, one in London, Field by Reading, both of which accommodate around 80 people. And to be honest, the rest of the portfolio is largely serviced offices, relatively small across the piece. Our individually biggest office is probably 20, 30 people, something along those lines, but most of them are probably sub 10 on a serviced office basis. The reason for the geographical spread, I mean, the different businesses have different customer sets. EIM, for instance, their customers, as well as being in the UK, are based in France and the US. In Holland, we have 3 regional offices that support that business, and similarly in our e-learning compliance business, the customers, as Dave mentioned earlier on, are based in Belgium and Germany. So therefore, we need staff, we need boots on the ground to service those customers. But in the core UK business, we have just the 2 main offices with a couple of small satellite offices. So in answer to your question, the bulk of the 68 million, probably 2/3 of which is delivered out in the UK from those 2 main offices, and the rest of it is spread amongst those overseas offices.
I think it's fair to say we've been through the simplification process, looking wherever we can to make sure that the offices that we have are relevant, pertinent to the business, and cost effective. Certainly in recent times, we've been thinking hard about our German location. It was pretty clear that it was large, wasn't necessarily needed to be, didn't need to be so large. We did get into a dispute with the landlord in Germany who was insistent before COVID, of course, that they would charge us for the space and we'd have to pay additional monies for that. Of course, post-COVID, people think about those things a little differently. So we've been able to, be creative, think about smarter use of accommodation, and make sure we're driving the best value we can for shareholders out of the footprint where we believe it to be necessary.
Thanks very much. It may have been answered. I had to pop out, but just what is the logic of having this Dutch and German business? Do these separate sort of businesses in the picture? I mean, are they things you intend to build on, or are they really not fitting in really to the plan you have? I guess you can't answer it too bluntly, but it seems a bit odd.
Well, we'll always answer bluntly. As I say, you'll have exactly the same. These are open conversations we have in our company with our staff and shareholders and the board. So no problems with that. When I first arrived in the business, I genuinely felt that we may need to have disposed of either one or other of the businesses you referred to generate cash. And to focus on the key things that I thought were producing the economic value in the business. I'm delighted to say that both of the businesses that we're talking about there are extremely well managed and run. They've got good teams, and they're not causing that there are no burning bridges or concerns that Rob and I have about those operations. We've looked at each of them individually, and we thought about very carefully about how we could extend and expand them, and how we could grow them if the opportunities presented themselves. For now, our focus is absolutely in the UK public sector area, where we think we can drive greater value. And over the period, we'll see how those things progress. But just to reassure everybody that both of those businesses are got great clients producing solid revenues and good profit and cash. So for now, we're comfortable with them in the business, but we are mindful of the areas that we do want to improve as we go forward. So we've got a careful eye on all those aspects.
Is the path to AI and machine learning via acquisition?
Well, one of the delights that I had when I joined the company, when we started to look at our development groups and our consulting groups, and a lot of them from being just tethered to particular product lines, is that we found we had quite a few people who had doctorates in AI. That was really pleasing. So bowing to their greater knowledge of the subject area than mine, we've been able to feed those kind of skills into our innovation teams, thinking about our R&D capability and how we invest in our product areas. So I think for now it will be organic. I suspect that the product sets that we use, if we go into some of those areas in a big way, will be things that we bring in. But I don't necessarily see Idox being an owner of an AI business to be the thing that we're particularly strong in. I think it's the use of that capability in the niche areas in which we operate.
Thank you. And then our final question, what sort of things would you look for in potential acquisitions?
Do you want me to answer that?
I'll let you have a go, Rob, because I'll use all the, as you know by now, I'll use all the oxygen in the room that's available to me.
Which is quite an achievement when we're in 2 different rooms. I mean, primarily it's clearly the industrial logic in terms of what a potential target would do versus what we have in a portfolio currently, and specifically public sector. So the key requirement is that it's a public sector business, that it is a software business, and right now we think there's quite good value in looking at the smaller end. So we've been using the term bolt-on, which for us is probably anything sub 10% of our current group size, probably even around the 5% mark. And we think there's a really interesting opportunity to help support some businesses, as I sort of described earlier on, really, where they have taken either a market leading product or certainly an emerging product and scaled that to a really credible size, maybe 30, 40, 50 customers, however, are really restricted by their own resources. We can take a business like that, expose their products to a much wider distribution through the UK with our extensive account management network, and at the same time, wrap a lot of corporate support around them in terms of development and support and marketing more generally, and really help scale that product to the markets that it's exposed to. So we think that's quite an interesting model, but the key criteria is clearly that it's squarely in the space that we play with, and it's either a technology or certainly a market that we and our various teams, sales teams, technical teams, are already relatively familiar with.